morning to all traders. Welcome to this Friday market insights video provided to by Orbex Stavros here on FX Miners today. I want to talk about the dollar against the Chinese yuan. I will also analyze the euro against the Canadian dollar and the Australian dollar versus the Kiwi, the New Zealandian dollar. All of those opportunities are very interesting to me. Now, on the first one, we've seen the dollar against the Chinese yuan weakening a little bit yesterday because the dollar was very weak. A number of macros that supported that move from GDP to the jobless claims, another 2 million, 2.5 or so added, and you know, the situation is getting worse for the dollar. Now, with safe haven also driven up, the dollar seems like that it switched its role once again. Now, safe haven was a little bit upbeat because there is expectations that Mr. Trump will deliver today, will announce his strategy against China. Now, Wednesday there was a bill that passed through the White House in order to sanction China for the Hong Kong legislation that they wanted to impose. Now, yesterday, China did actually make that a law, and the US is expected to retaliate. Then the game has the same face, right? China will be expected to retaliate back to the US, and we've got the same game playing once again with the trade war, most likely on the financial and on the technology front. With that said, I will be paying attention to the headlines or Mr. Trump's tweet feed, to be honest. On the other side, as I talked about the Aussie earlier, we had RBA's low speech overnight, and he said that we're not going to see rates increasing for a while in Australia. Now, that makes me think, are we going to see the Australian dollar weakening against the Kiwi? That actually chart supports the same view. Eurocard on the other side, euro has been improving. We know there is hopes now that the 750 billion euro recovery fund will be approved next week. So let's have a quick look on the charts. Now, I'm actually out on the daily chart over here, right? Because I want to show you what I'm looking at, okay? I'm looking at an ABC correction over here in the cycle degree, right? So I've got ABC, ABC, AB, and I'm expecting another C. Now, we're talking about this being a C over here last time, and we're expecting this to be 1, 2, 3, 4, and 5, if you recall. But obviously now, I was expecting this to be a leading triangle, right? And then have a 2 and a 3. But with this top being revisited again and taken out, it means that there is no correction any longer, right? This is not a correction. But it does look like one. So since we have two corrections and we've taken the previous high, it looks like to me this can end up being an ending triangle, right? And that would suggest that since we are done actually with the first and the second waves, we're going to go up for wave 3, okay? Then we're going to see wave 4, and then we're going to see wave 5. And once we get that overthrown over here, then we can probably start looking for prices to move lower. Now, let's jump on to, which one did we say we would do? We would do the Eurocard. I've actually spent some time looking at this chart yesterday, and from a structural perspective, I've decided to call this and W, X, Y, X, and Z. So that's a triple zigzag, okay? And how I'm looking at this, we are in the last wave, Z, right? And being in that wave means once we get to fresh high, we can expect prices to move lower, right? Now, since we've done wave X down here, we had an ABC over here that's a W. This looks like an extended correction, so we call this a triple zigzag within the triple zigzag, right? So this is in the minor degree, and after that, it looks like to me we're moving up for an ABC correction to an end wave Y, and also is going to be of a double zigzag, right? It's also going to be the end of the triple zigzag. Now, with that, part over here, I'm looking an ABC, right? So we still haven't done with wave, are not done with wave A. So what, 1, 2, we've done wave 3, okay, wave 4, it's an ABC with an A being a leading diagonal, then B and then C. It looks like C ended because we had a fresh low below that level, right? So probably we're expecting a 5-wave impulse to the upside to take out wave A, right? That assumes that we are done over here, right? It could be a case where this is an A, this is a B, and we're going to get another wave down as wave C. In the short term, though, I do see more upside anyway, since we have a strong euro as well. And last, Aussie against the New Zealandian counterpart, the neighbor. Here, okay, let me just go out on the daily so you can see what I'm seeing here. I've been looking at this for a while now. I'm looking at this actually being 1, 2, 3, 4, 5. I'm looking at this being a 1, 2, 3, 4, and 5 ending triangle, right? So we've done 1, we've done 2, we've done 3, a fresh low down here near the, actually we went to unity, right? And a false break. And now 4, since we are actually very close to, let me just grab that over here. Yeah. So we are very close to ending 4, okay? So we could see prices just moving a little bit higher, or not, okay? To take out this move, this way, this triangle over here, this channel. If not, we're moving straight down anyway. But we could really get up there, which means from 1067 to 1088 or so, and then, excuse me, once we get there, we can start looking for price to move all the way down to create fresh lows, okay? So that's what I'm seeing on Aussie against the Kiwi. Now, since this is now turning down, we could see this correcting down to this regression line as an A, you know, and then a B, and then we get a C. And then wave 4 would be over here. So there is different scenarios we can play with that, but we are expecting wave 4 to complete and then wave 5, and this is what it is important. So I want to wish all of you to have a great weekend, and I'll speak to you again on Monday.